As banks have parked a record 8.4 lakh crore surplus funds with the RBI, are we seeing signs of a lending pause? That's the big question that we at ET now also are trying to address. What does this excess liquidity mean for banks? Nikunj Dalmia decodes that for us. Let's take a look.
Surplus liquidity do banks have, or have they become completely risk averse? What is being called as financial prudence in terms of lending, is this more like a complete risk aversion which may just end up creating a complete breakdown of the credit cycle or risk-taking ability? I hope we are not there yet, but there is evidence that right now banks are in no mood to lend. Just look at the data, and again we have the Monday data, we don't have the Tuesday data, I have the Monday data, which says that RBI has absorbed nearly 8.4 trillion rupees via the reverse repo window. To just make it very simple for our viewers, banks right now have surplus liquidity. If they do not want to lend, the only option for them is to give the money to RBI so that they get a little bit of advantage on the reverse repo rate. Now that reverse repo rate is dramatically and substantially lower than the kind of spreads what they would earn. So banks, the fact that they are putting back money or giving back money to Reserve Bank of India through the reserve repo window, it clearly means that they are not in a mood to lend. So the problem is not liquidity, which is what a lot of experts think, that okay, there's a liquidity crunch in the economy. No, it's not liquidity. There is surplus liquidity in the system. The fact that banks do not want to do any kind of an heavy lifting, it really could be risk aversion, it could be a judgment on their economy, it really could be because they feel that if they lend right now, the NPA cycles could recover, NPA cycles may start again, and they may end up looking bad and the book value will deteriorate and minority shareholders will not be very happy, or all the factors which I mentioned. But the bottom line here is that there is additional surplus, abundant and more than adequate liquidity in the system, and banks are not lending. And unfortunately, when the credit cycle stops, then you definitely will have a further slowdown in the economic recovery. Credit creates demand and demands create more credit, and that's how the wheels of the economy move. As of now, one wheel is completely reversing, which is evident given the way how a lot of money or how surplus money from banks is clearly moving back to RBI via the reverse repo window.